Hi there folks, welcome to this week's weekly Forex Forecast. It's Monday the 27th of September. So last week, big case of risk off. The global stock markets were crashing around the world. All on the back of the Evergrande debacle out in China, where there's a potential that one of the largest companies out there wasn't going to pay its corporate bond dividend payments, its coupon payments. Stock markets around the globe, as I say, crashed. I think the S&P 500, the Dow, down over 5% at one point. We thought it was Armageddon. But since then, everything seems to be okay now in China, and off the market goes again to the upside. So now we're in a case of risk on again. In a moment, when I jump onto the charts, I'll show you exactly what happened to the Dow. You'll see how that correction indeed was short-lived. But of course, these market risk on, risk off sentiments, they have knock-on effects in the currency markets as well. And the US dollar has been performing pretty much all of last week on the heels of the FOMC, basically where Fed Powell was quite hawkish in his delivery. And also the dollar has got some bid potential as well when markets do have risk off, because there's a flight to safety into the US dollar as well. So it's a double win almost for the US dollar. Risk on, we basically see the markets going higher with the bonds going higher and the markets are flowing into the dollar. Risk off, safe haven, dollar goes higher. More about that in a moment. Let's have a quick look then at what we're looking at for this week, which is actually quite light on the numbers. So what I suggest you do is go to the forexsignals.com website. If you scroll to the bottom here, you'll see our Forex forecast. Click on that, and it pulls up our forecasts for the week. Now, if you want this sent directly to your email, just chop your email in there, and then it will be sent there the moment it has been released. So this is basically what we're looking at this week. Max is looking at the NASDAQ. That's the basically the tech stocks. He's bullish of the NASDAQ, expecting that to carry on grinding higher with the global stocks now that we seem to be back and into risk on. So you can check that out as well. Max is, I say, quite comfortable about that. I'm looking at the Aussie against the Japanese yen again this week. Aussie is a commodity currency. We are in risk on. The commodity currencies tend to do better in these environments, and their safe haven, the low yielders, Japanese yen tend to underperform. Certainly this week, the market started off with the yen on the back foot. So I'm looking for trend continuation. We did have some price action showing that this level of support in here around this 80 level has been respected with some price action patterns taking the path of least resistance higher. But again, we'll talk about that when we jump onto the charts in a moment as well. Max's analysis is there. He's talking there about the events of the week. Not a lot going on this week, but there are some central bank speakers out this week, so we're looking at that. Also, we've got the technical analysis here for Mark out in Australia with his view on the different currencies in the G8 as well. So they're well worth a look in there. And there's my review as well. So you can check that out. Make sure you drop your name or your email in there, and it'll be sent straight to your inbox, as I say. Or indeed, you can come over to the forexsignals.com website and you'll access it there as well. Right, let's now jump onto the charts and have a look at what we're looking at this week. Come on. Hi there folks, now this week I want to start off by looking at a chart showing the S&P 500, basically the top 500 companies traded out in the US. When we talk about risk on and risk off, we always look at the US stock market as our barometer, if you like. And you see here on this chart that the US S&P 500 has been on a tear to the upside pretty much all of this year. In fact, pretty much since Trump was elected many moons ago. But the stocks have been grinding high. You'll see we've got this ascending channel in here. Last week we had a bit of a panic. We had a bit of a panic with the Evergrande events going out in China. There were obviously traders getting cautious and moving their money out of the riskier assets, the stock markets and so forth. You actually saw a drop of about from last week. You actually saw a drop of about 4%. But since then, and that's only 3 or 4 short days ago, the the stock markets have now recovered. They've recouped the 4% drop that you saw from last week that was getting a lot of traders very, very nervous. Now back up to where we were before the Evergrande events started to unfold. So you see all these pullbacks we've seen in the stock market, all these pullbacks this year, getting people to think this is a correction, this is a correction. Well, it's only been a few short days before that correction has been reversed, and indeed it ended up being just a pullback, and I think that's exactly what's going to happen again with this pullback, and at some point you are going to see some new time fresh highs. Remember I spoke about it a couple of weeks ago. Deutsche Bank put out a survey where they surveyed 550 top traders and market officials, market players, and they basically said that I think it was like 2/3 of them are expecting the stock markets to pull back 5 to 10% this year. I love it when all the analysts start talking about that. It normally means do the opposite. Stock markets are now going back on into risk on mood as well, and that is seen as supporting the commodity currencies, in particular the Canadian dollar, the Australian dollar, and sometimes the New Zealand dollar as well. Let's have a quick look here at the momentum meter. Now this is my faithful momentum meter. You'll see here we've got the strong currencies, the purple line up here, that's the Canadian dollar being dragged up there with oil prices. You're also seeing the Australian dollar showing some strength in there, and you're seeing some strength coming into the British pound on the heels of last week's MPC, where they basically had two voters voting for an immediate end to the QE. But interesting here that the US dollar is also showing some strength. And why is the US dollar showing some strength? Well, I'll tell you why the US dollar is showing some strength, because we're looking at this right here. This is the US 10-year government bond yield. Remember, I spoke about this a couple of weeks ago, saying that if we break through this 137 resistant level, this is a daily chart of the bond yields, then we'll be moving all the way back up to 150. Boy, oh boy, we're almost up at 150 as we speak. So this is supporting the US dollar. If you want to capitalize on these higher interest rate yields in the bond markets, clearly you need to buy the US dollar first, which is why the dollar is now grinding higher. And I wouldn't be surprised to see a retest of that 170 level at some point. You remember the Fed last week, I thought Powell was actually quite hawkish in his delivery, and also in the Q&A afterwards. I think he was just itching to get into some tapering and then start talking about the rate hike cycle as well. And that is now filtering through into the bond markets, and you're seeing that dollar strength. So the dollar really has the impetus to be strong in risk on and in risk off as well. So buying the dollar at the moment does seem to be the name of the game. And obviously when the dollar goes strong, normally you see a weakening of the euro, because that is the most actively traded currency pair on the planet. I think it accounts for about 30% of all FX transactions are in the euro against the dollar. So normally a strong dollar will see a euro. So I'm looking this week at maybe seeing if I can find some plays by selling some euro as well. Also looking at maybe selling some yen and some Swiss franc, those low yielding currencies, and buying those higher risk currencies as well. But as always, you've got to trade your trading plan, trade your strategy. Don't just take that and start playing in the markets. That is no better than gambling. And make sure you have a strategy that you're back tested and that you are following the rules. Right, let's have a quick look at the economic calendar for this week. I do know that not very much is going on. Let's just have a look and see exactly what is in store for us this week. Okay, so head over to forexsignals.com, scroll right down to the bottom. This is where you'll see all our free tools and content, where you can get your hands on the currency strength meter, the heat map, and so forth, profit calculator, what have you. So here we go, the Forex economic calendar. Click on that, and basically shows you what is coming out this week. Very important if you're trading the markets that you understand when big events are happening, for two reasons really. A, so you don't get caught out and get stopped out immediately when you place your trade with a big news event just coming out. And secondly, there may be some money making opportunities out there as well if you are trading the news. As I say, not a lot of news out this week. We have got some durable goods orders out of the US later, Anything that's deemed to be red is high impact news. That's where it's likely to have a big impact on the markets. Yellow is deemed to be medium impact, and green is a low impact news. I like to look out for the next 7 days by clicking that little tab there and scrolling on through. Okay, so we've got, as I say, not a lot out in terms of economic releases. We've got some UK GDP out on Wednesday. GDP, gross domestic product, basically tells you the health of a particular economy as well. Actually looking for a drop quarter on quarter of down 1.5. So quite a negative read there, really expected. And of course, if the read comes out better than expected or worse than expected, that's when the markets would tend to move. Also on Wednesday, on the 30th, we also have some news out of the Eurozone. We've got consumer price index. It's basically inflation. Central bankers always look at CPI. They are mandated to control inflation. And of course, at 2% generally. And of course, any overshoot or undershoot normally would inspire a reaction from the central bank. Of course, we're in a funny old climate at the moment after COVID or and so forth. So inflation has been running high across all the developed economies, which a lot of the central bankers believe to be transitory. We've also got the unemployment rate out as well. And unemployment in Eurozone is looking at 7.6%. So we'll keep an eye on that. So not a lot out this week apart from those two releases. We do have a number of central bank speakers as well. We've got Lagarde speaking, Bailey's talking in the UK. We've also got Fed Powell talking as well. So we will be watching the news wires for those central bank speakers. Not sure if it's going to be too important because both of those, or the main central bank speakers, are following on from their interest rate policy decision, which were last week, and they basically pretty much said what they wanted to say. But markets will certainly be paying attention to them as well. So there is your economic calendar. Make sure you come over and take a look at that. Okay, there you go. Hope you found this useful. Don't forget, if you want this delivered straight to your inbox, drop your email in there and you'll get it the moment it has been sent out. Don't forget, we are streaming live around the clock as well, looking at market opportunities, discussing strategies and so forth. If you want to take part in that, you can do so. Just come over to the forexsignals.com website. You can take out a 7-day free trial as well. If that's not your thing, that really isn't a problem. I'll see you next week and have a good week.